Hello traders, Joseph here again. Thank you so much for joining me on another edition of my weekly video. Now in today's video, I'm going to be talking to you guys about why technical trading or technical analysis is so difficult and why it is very difficult for a technical trader to make money in the Forex market. And I'm going to show you guys a few examples and how you can go about overcoming those obstacles. And yeah, so technical analysis. First of all, what is technical analysis? I mean, there's three different types of trade. If you're a trader, you can either trade in three different types of ways, which is either you're a technical trader, or you're a fundamental trader, or you're a sentimental trader. I'm not going to go into details explaining what those kind of trading are. You can just find those information on the internet. If you Google any one of them, it's going to come up with enough information. But I want to focus on just technical analysis. Technical analysis is basically you kind of finding chart patterns and try to understand their behavior, and then using that to predict what the market is going to do in the future, because that's how you make money in trading. You have to be able to predict what the market is going to do. And so one of the reasons why technical traders find it so difficult to make money is because they don't understand how to read charts. I mean, even if you know how to read charts, you're still going to struggle to make money in the Forex market, simply because, okay, how did you guys start learning how to trade? I mean, there's a lot of people that kind of learn how to trade by just reading information on the internet and obviously paying for trading courses, and which is not a bad thing. It's not a bad thing to pay for a trading course. It's not a bad thing to find information online and to kind of teach yourself how to do that. But the problem with that is that looking for information online, there's kind of a bit of repetitiveness in the kind of information you find. So for example, if you're trying to, so let's talk about what's a random technical analysis, technical strategy. Let's say head and shoulders. If you go on the internet right now and type in head and shoulders, you're probably going to come up with so many different websites that are going to pretty much give you the same information of head and shoulders, how the market behaves when it makes head and shoulders. And so no one actually goes into like too much depth in terms of understanding what actually happens when the market forms a particular pattern. So in today's video, I'm going to take a pattern that probably a lot of people are familiar with, and I'm going to try and give you guys an in-depth analysis in terms of how you can understand every single thing that the market will do whenever that patterns arise in the market. And that pattern I'm talking about, it's wedge formations, wedge patterns. Now some people might call it wedge patterns. If you're a wave analysis or an Elliott wave trader, you're going to call it buy setups and sell setups, and if you're my kind of trader, then you're going to call it complex contractions, because that's what I teach my traders in my trading group. So let's go over to the chart, and I'll just give you a brief explanation of what I mean by by kind of going on the internet and finding information. You're just going to cite similar informations basically. So if we take, for example, let's say we're looking at looking at a falling wedge. So depending on where the wedge is being formed in the market. So for example, if we have a bullish impulse leg in the market and you've got a falling wedge, something that looks like this, right? So what you're going to find out on the internet is the fact that every time a market makes a falling wedge pattern, or these type of falling wedge pattern that was preceded by a bullish impulse, like the market is usually going to break to the upside. I can guarantee you that you can type in wedge patterns on Google right now, and every single website, this is what you're going to see. It's going to show you where the wedge formation is going to form and how the market is going to break out. But this information is very useless, simply because if you take this information and you go on to trading and try to make money from trading, I can guarantee you that you might win a few trades, but in the long run you're going to end up blowing your account after account, because this is what I call, I mean, there's no analysis here, there's nothing here. This is just kind of basic knowledge. This is basic knowledge. I can teach anyone how to what this market is going to do, whatever it makes this pattern, and how it's going to break. But this is not going to make you money. Because one of the things that you're going to learn as a trader, for example, I mean, if I teach you how to trade, one of the things you're going to learn is the fact that every time a market breaks out of a pattern, it should never be a signal to buy. That should always be taken as a first sign of communication. You're right, the market is going to break out to the upside, but it doesn't mean it's a trade that you can actually make money from. Because most of the time, these breaks, sometimes it's even a little break, and then the market completely does whatever it wants. But the whole point of this is I'm trying to teach you guys how to understand the different types of behaviors after the market makes this kind of move, after the market gives you that first signal. That should only be taken as a trigger to prepare yourself as to what's gonna come in the future. So, like I explained to you, some people call this wedge pattern, some people call it sell setups, buy setups. If you're trading wave analysis, I call it complex contraction. And I'm gonna just delete all of this, and then we're gonna talk about a particular one. So let's say we have a bearish impulse in the market. I'm gonna bring in a red color. We have a bearish impulse in the market, and the market kind of gives us, it's not a perfect wedge, but I call this complex contraction. A lot of people are going to call it something different. Wave analysis, like I said, they're going to call it this a sell setup, because when the market makes a pattern like this, the expectation is the market is going to break to the downside, and that's perfectly fine. The market will do that. This will break to the downside. But what I'm gonna do, I'm gonna draw another one here next to it. This is gonna give you a little bit of insight into understanding, because the most important thing that you're gonna do as a technical trader is you have to understand how every single pattern. There's so many different technical analysis, technical patterns. But what I find out, why people don't get the proper education is the fact that people only teach you the basic. They just show you, okay, on a pattern. And the thing is that I don't blame them, because if you go on the market and you try to find wedge patterns, 99% of the time you're going to see the market doing exactly what people tell you that the market is going to do. But that's never going to make you money, because for you to take advantage of those kind of movements, it's very rare that the market will just break out and just head straight down. Guys, believe me when I tell you this, the market doesn't do that. If it does that, then everyone would be, the percentage of people that are successful in trading will be well over 90% if the market just do what people tell you that the market is going to do. So, the second diagram I'm drawing right here is the same with the first one. So we're going to call the first one A, and we're going to call the second one B. Try and move this a little bit up. Actually, I don't even have too much space, but that's okay. We'll just make do with what we've got. So I'll label that B. And when it comes to B, I'm gonna stop there. So let's go completely full screen. So now what you're gonna see there's a difference between the first one and the second one. I'm gonna call it contraction because that's what I teach my traders. That's what I call it in my Zoom classes, complex contractions. So I'm gonna call this contraction 1 and complex contraction A and complex contraction B. But this you're gonna find this on the charts. You're gonna go on and we're gonna go some examples. I'm gonna go through some examples and see. But this is just for me to kind of take you guys 2 steps further and show you guys that this market does have different levels that it goes to kind of prepare your mind in a way that you can be able to say, okay, if the market does this, I know exactly how this is going to behave. I know the behavior of this market. So even if I'm going to trade it, you're going to be very cautious, because like I'm telling you guys, if you're going to do what you see on the internet, what people are saying, you're never going to make money. So we got complex contraction A, complex contraction B. So the difference, as you can clearly see, is the fact that with complex contraction A, we have the market coming down and breaking the previous structure level here. I'm gonna put this level, change it, put a different color. Actually, that's not the best color to put there. I'm gonna, let's leave it green. And with complex contraction B, we see that the market not breaking that level, and that is very, very significant. A lot of people are not going to tell you that, but that is very, very significant. Knowing that little detail can save you a lot of money in trading. But how? Okay, so let's go back to our first complex contraction A. So that this is how the market behaves. Every time a market makes a contraction like this, 99% of the time it will break to the downside. Once the market breaks out of that contraction, like I tell you guys, always take that as a first sign of communication. It's nothing. You should never be involved in a trade like this, because you don't know what the market is going to do once it breaks out of this contraction. The market can break, stop right there and go up. It can break, go down, go up. Market can do whatever it wants to do. But the fact is, the market will break down to the downside when it makes a pattern like this. So when the market makes a complex contraction A and breaks the previous structure, let's call this a previous structure. So in complex contraction A, if the market breaks out of the contraction and breaks the previous structure, in both contractions, the market would retrace after breaking out of that. That's why I say it should always be first sign of communication, and you don't know where the market is going to retrace. But the thing is that the market will retrace. It will retrace. Sometimes it will retrace before breaking the previous structure, as in complex contraction B, or it will retrace after breaking the previous structure, as in complex contraction A. That's why it's very, very difficult to form a strategy around just trading when the market breaks out of a wedge pattern or complex contraction or sell setup or buy setups in trading. It's very difficult to have a strategy around that, because you can never be consistent. You don't know what the market is going to do. That's why you should always take a step back, wait for the break to happen, wait to see what kind of what kind of contraction it is, A or B. If it's contraction A, the market will break the previous structure. It will retrace. So this retracement, most of the time, it will stop at the 618 retracement. So the market will retrace to the 618 retracement. $61.8. Let's put 61.8 there. So the market will trace to the 61.8. And same as this one as well. It will retrace to the 61.8 Fibonacci retracement. And once the market done that, the next move after the market retracing to the 618 retracement is that the market will start to go back in the direction of the impulse leg, of this bigger impulse leg. The market will start to go there, and the market will start to go there. But this is where everything changes. You see why I told you why the reason why this breaking the previous structure is very, very important. If you don't know that as a trader, it's like you're gonna be trading like a blind man in trading, really. This is important. When the market breaks the previous structure, it will retrace. Once it retraces to the 618 and then starts to go down after retracing to the 618, the market has 3 different areas where it's gonna stop and pause and potentially reverse. So the first area, this previous structure here. The second area, previous structure at the bottom here. And the third area, the 127141 extension at the bottom right there. So the market will definitely pause here. It might completely reverse the trend and go back up, or it can come all the way down to the bottom here, making a double bottom, and then completely reverse. It will come all the way back down to the 127141 extension before either reversing or correcting to continue going further down. So this is very important. If you don't know this as a trader, if you just know the fact that when the market makes a wedge pattern, it just breaks and that's why you take the trade, you're on the verge of committing suicide in trading, basically. and that I mean by that is blowing your account. But this is significant, breaking previous structure. So what about if the market doesn't break previous structure? Let's go back to complex contraction B. If the market doesn't break previous structure and it comes in, starts reversing at the 618, 99 times out of 10, this market will go straight down to the 127 extension, because it doesn't really have any obstacles. Probably this is the only obstacle that it has, but this market will go all the way down to the 127 extension. With complex contraction A, that is not the case, because the market has equal chance of reversing at this. So the reason why the market might reverse at the first structure level is because we have a head and shoulders here. The head, left shoulder, right shoulder. Here, double bottom. Here, 127 extension. And sometimes you have to think like the other trader, because here you're saying that the market form a head and shoulders. There are traders that look for this and say, oh, head and shoulders in the market, reversal sign, they buy the market. And you as a trader who's selling this because it's a wedge, rising wedge pattern, you know it's going to break to the downside. You see the market go to the downside and the market starts coming back up, you're going to be like, what the hell is going on? Like, you know, they told me it's going to break to the downside. Why is it going back up? You have to understand every single behavior of the market. Okay, so now this is pretty much, even I call this is basic. To me, this is basic information I'm giving you guys. Even though you're not going to find this information anywhere on the internet, you can go ahead and type it, you're not going to find it. But there's still another level, another step that we're going to go to before I give you guys, in terms of like, before I show you guys something that can still happen, which can have an effect in the direction of this trend, and then give you some examples as well. So I don't want to make this video too long. I've already, like, you know, I haven't done a video in a really long time. But if you guys want to see the next video where I'm going to go into details, into more details, and even show you examples on the charts, I'm sure you can use this and go and apply it to the charts, and you're going to see how this thing actually works. But if you guys want me to, you know, drop your comment down below, and I'm going to see your comments. If you want me to make a part 2 of this video where I show you, go into in-depth analysis, show you more examples, because this is going to make a huge difference to your trading. I guarantee you that. And yeah, so drop a comment, let me know in the comment section down below, and yeah, hopefully there's going to be a part 2 to this video. So anyway, thank you so much guys for tuning in, thank you so much guys for watching, and yeah, I mean, if you like what I do, I mean, I haven't been putting out videos in a really long time. I told you guys I've been busy, but you know, I'm still around. So, you know, like, share and subscribe to my channel, and follow me on TradingView as well. And if you want to join my Zoom classes, and where I do lessons every Mondays and Fridays, I mean, the space is still open, so just come in and join me, and you're gonna see trading in a different way, really, because I go more in depth. I don't just teach you things on the surface. I mean, it's only £500. It's not gonna cost you too much, really. Or you can come and join me on my WhatsApp trading group, and see how we take these kind of trades. And yeah, so that's it, and I'll see you guys on the next video.